everyone, welcome to the Real Estate Tax Tips channel. My name is Cherry Chen, a chartered professional accountant located in Oakville, Ontario, Canada. And I'm on a mission to become the Google map for hardworking Canadians seeking financial freedom. So a couple weeks ago, there is a Toronto Star article that just popped up. It titles homeowners who regularly rent on Airbnb and other short-term rental sites must pay 13% tax on property value when they sell. Reason tax ruling fines. Well, the reality is that this has been around. The rules have been around for a very long time. As a matter of fact, my previous Airbnb tax video actually talked about the tax implication. When I talk about tax implication, it is on top of the income tax. We're talking about GST and HST tax implication on the sale of the short-term rental. And my previous article and previous YouTube video had already got it covered. But now, because of this reason, Toronto Star article that talked about it, it brought everything back into the surface. And finally, we have a court case that basically said that, hey, this is truly applicable to short-term rental resale. So with that, we're going to use this particular video to dive deep into this court case and explain how this could apply to your Airbnb or short-term rental as well. But before I get started, make sure you give us a thumbs up if you like this video or share this video with your friends and families that are operating short-term rental. And if you like to stay on top of the latest tax tips, make sure you hit the subscribe button below so then you can be notified as soon as our newest video gets released. Now with that, let's get started. Short-term rental leases of less than 30 days are generally subject to GST or HST. This means that short-term rental landlords should be charging GST or HST on these rentals and filing GST and HST returns accordingly. Now, short-term rental landlords can also claim GST and HST pay on supplies. Now, this includes cleaning services, cleaning supplies, utilities, property management fees, and other related expenses. Practically all expenses that are subject to GST and HST, if you pay for it and use that service to help you manage your Airbnb or short-term rental, you would be eligible to offset the GST and HST that you pay against the GST and HST that you collected. And these GST and HST that you pay, generally in tax term, they're referred to as input tax credit. Now, the net amount of GST and HST would then be reported on your GST and HST return. And if there is a balance payable, you pay it to the government. If there is a balance receivable, you claim it against CLA and you get the money back. And a pro tip here, every time you ask money from the government, especially related to GST and HST, you always get audited. So make sure that your paperwork is really clean. Now, when a property shifts from long-term rental, so initially when long-term rental, there is no GST and HST applied to long-term rental. We all know that. If you shift the property from being operated as a long-term rental to short-term rental, which is then less than 30 days and is subject to GST and HST. It is converted from essentially an exempt residential property to a commercial property, making it subject to GST and HST. Now, the most significant difference between a residential exempt supply, which is a long-term lease property, and a commercial property is that you use to operate a short-term rental, is the application of the GST and HST on the sale of the property. Now, for residential resale property, meaning long-term rental property, owners typically do not need to charge GST and HST on the sale of the property. You can just sell it. And as a matter of fact, on the agreement of purchase and sale, you would be able to see that there is a little clause, at least in Ontario, in the Ontario agreement of purchase and sale form, there is a paragraph that specifically says that this is a residential property and therefore it's exempt from GST and HST. And if there is any GST and HST applicable, it would be included as part of the price. Now, on the flip side, if it is a property that is commercial property, GST and HST is charged on the sale regardless of whether the property is new or previously owned. So even if it is resale of a commercial property, GST and HST would still be charged. Now, when it comes down to using the forms, at the time when you draft up the agreement of purchase and sale, if you use the standard form, even the form being used would be different. You would essentially use the commercial form on the form itself. On the standard commercial agreement of purchase and sale form, it actually has a similar paragraph saying that the GST and HST is in addition to the purchase price. So there is significant difference when a property is considered residential versus commercial. Now, when I talk about residential versus commercial, I'm talking about purely from the definition of GST, whether GST or HST is being applicable. If a buyer is purchasing the property for commercial use, such as continuing to operate it as a short-term rental, so this person, the buyer, is continuing the Airbnb, then they may be able to claim an exemption from paying GST and HST on the purchase. They need to do a self-assessment and all these things, but they may be able to avoid paying GST and HST on the purchase, assuming the buyer is continuing to operate the property as short-term rental. Now, there's a recent court case that's brought to light by the Toronto Star article, like I mentioned earlier. The name of the court case is 1351231 Ontario Inc. versus the K, and it brings the attention to the GST and HST implication when you convert a residential property from long-term to short-term rental and then selling it. Now, here's the breakdown of the fact, legal issues, and the court decision. The taxpayer, 1351231 Ontario Inc., and I'm going to refer to the company as the taxpayer. The taxpayer purchased a condominium in Ottawa, and it was operated as an investment property since 2008. It was purchased in 2008. It has always been an investment property for the longest time. For 9 years, actually, for the first 9 years, it was rented out through a series of long-term leases, each exceeding 60 days, which qualify the rental income as an exempt supply for GST/HST purposes under the Canada's Excise Tax Act. Now, in 2017, the taxpayer shifted strategy, listing the condo on Airbnb, where it was leased for stays under 60 days. I mean, on Airbnb, nobody really rented for longer than 60 days, and the taxpayer didn't really intentionally rent it for less than 60 days, but because it was listed on Airbnb, generally speaking, people are seeking short-term rental, and therefore majority of the lease since 2017 was less than 60 days. And this generated substantial short-term rental income in 2017 and 18, marking a change from the property's use as a long-term rental to a commercial activity under the Excise Tax Act. Now, in early 2018, the company sold this condo without remitting any GST and HST on the sale, because on the basis that the property is considered residential resale, which is considered tax exempt. Now, here is the key legal issue. Was GST and HST applicable to the condo sale? Well, the central question was whether the sale was taxable as the property's use shifted from long-term exempt residential leases to taxable short-term rentals. Well, the Canada Revenue Agency, the CRA, assessed the taxpayer for GST and HST outstanding, totaling over $77,000 on the sale, which led to this particular court case and this appeal that we're looking at. Now, the Excise Tax Act defines a taxable supply as one made in the course of commercial activity unless exempt. Given that the property's use had shifted from residential to commercial short-term rental, the CRA is arguing or argued that the condo sale should be treated as a taxable supply, meaning a commercial sale, commercial property sale, subject to GST and HST. In other words, at the time the condo was sold, CRA considered the property as a commercial property because it was operated as a short-term rental unit. Hence, GST and HST was applicable, unless the taxpayer can prove that the property does not meet any of the exemptions available. I know it gets confusing, but hang in tight. I'll attempt to explain to the best of my ability because it took me a while to understand what I'm going to explain as well. Now, A residential complex is generally GST and HST exempt on resale, unless it falls under one of the three exemptions. I know we call it exemption, it's really exemption. These exemptions really define when a property loses its residential status and then becomes commercial for the tax purpose. If any of these exemptions apply, the property is treated as commercial property, meaning GST and HST is charged on the sale. Now, here is how it works. If none of these exemptions apply, and we're going to talk about the exemptions in a bit, if none of these three exemptions apply, the property keeps the status as the residential complex. If any one of these exemptions apply, the property loses its residential status, and meaning that the sale becomes a taxable commercial transaction. Then GST and HST will be charged. Now, so to clarify, to summarize what I just said, is confusing as heck, trust me. These exemptions don't protect the property from GST and HST. They actually remove the GST and HST exemption, making it taxable as commercial property. Now, so keep that in mind when you're listening to my next section to talk about all these exemptions. When it comes to the GST and HST tax on the resale of properties, there are three main exemptions that could help property owners avoid extra taxes, which is GST and HST. We're only talking about GST and HST here. These exemptions depend on how the property is used, especially if it's being rented or sold. Now, I'm going to read you the three exemptions, and then I'm going into detail in explaining each exemption. The first exemption is hotel or similar use exemption. The second exemption is the builder exemption. And the third exemption is all or substantially all leases that are less than 60-day exemption. Now, these are the three exemptions. Now, let's dive deeper into each exemption. The first exemption is the hotel or similar use exemption. Now, if a property is being used in a way that's similar to a hotel, motel, or inn, or other places where people stay short-term, or room and board houses, is usually considered commercial instead of residential. So this means that it can lose its GST and HST exemption because it's being used more like a business than a home. So for example, if a condo is rented out nightly on Airbnb, it might fall under this exemption and be treated like a hotel for tax purposes. In this particular court case, the taxpayer began renting the condo through Airbnb for short-term stays, sometimes as short as a single night, and as a matter of fact, it's mostly for single night during the 2017-2018 period. Landlord covered the amenity site like furniture. It's fully furnished. It includes heat. It has Wi-Fi. And the court determined that by using the condos in a hotel-like way, the property fits this exemption. This means that the condo was no longer seen as a residential complex for GST and HST purpose, shifting it to commercial property status. So just by this particular definition, the condo is now a commercial property. Now, the second exemption available is builder exemption. Whether the owner of the property fits this builder exemption. If it fits this builder exemption, then GST and HST would apply. If it doesn't fit the exemption, then GST and HST won't apply. Now, what's the builder exemption? This builder exemption applies to people or companies considered builders. If someone builds or heavily renovates a property, substantially renovate a property to sell or rent it out, they might be treated as the builder under GST and HST rules. And builders don't get the same tax exemption on their properties because they are seen as creating new commercial supplies, so new inventory of properties in the market. So if a person buys, fixes up, and then frequently rents or sells the property, they might lose the exemption. Although this exemption often applies to those constructing or significantly renovating properties, the taxpayer here wasn't treated as a builder. So it doesn't, the court case, taxpayer is not treated, does not meet the definition of a builder. And since the taxpayer didn't undertake substantial renovations with the intent to flip or redevelop the condo, the builder exemption didn't apply in this specific case. And this was not a factor that influenced the GST and HST decision here at all. Now, the third criteria, the third exemption that they look at is all or substantially all leases less than 60 days exemption. Now, this exemption applies if the property is mostly rented out for very short periods of time, less than 60 days at a time. And if nearly all the leases are short-term, the property is considered a commercial property and loses its residential GST and HST exemption. So if someone rents a condo for only a few days each time, in this particular case, that's the case, the property might not qualify for the tax break given to regular long-term homes. And this exemption applied to this court case and to this particular taxpayer because by the time of sale, nearly all leases were short-term, under 60 days. The court reviewed the condo's use close to the sale date and found that most leases during that period were short-term Airbnb rentals. This triggered the exemption, categorizing the property as commercial. As a result, the condo lost its residential complex status, so GST and HST is applicable on the sale of the property. Now, what had the lawyer done? Because this case is an appeal case, and what did the lawyer say? What did the lawyer representing the taxpayer say? Well, the argument posed by the taxpayer or his lawyer, is that the taxpayer argued that because the condo had been leased long-term for over 60 days for most of the ownership period, it should still qualify as a residential complex, and therefore the $77,000 charged by CLA should not be applied altogether. And they believe that the assessment should consider the entire ownership period from 2007 all the way to 2018, not just the most recent use. But the court disagreed with this interpretation. The court stated that the Excise Tax Act requires a point-in-time assessment, meaning that the property status should be only evaluated based on its use at the time of sale, not the historical pattern of use. So since at the time of sale, we all know that the condo was primarily used for short-term rentals, it lost its residential status under the Act and was treated as commercial, triggering the GST and HST on the sale. Now, this point-in-time interpretation aligns with the Act's intention to tax properties used in a commercial way, regardless of prior long-term use. The court essentially ruled that a property's GST and HST exemption status hinges on its use at a specific moment, not across the whole ownership period. Now, what are the key takeaways for us real estate investors who are Airbnb short-term rental investor? What are the key takeaways and lessons learned from this particular court case? The first thing is maintain long-term use consistently. Well, to avoid self-assessment under the change in use rule, which is changing it from residential to commercial and then selling it, you should stick with the long-term leases for over 60 days throughout the ownership period if your goal is to keep the property GST and HST exempt. Switching to short-term rental, even briefly, creates a taxable event that requires self-assessment and remittance of GST and HST on the property's fair market value at that time. Number two, limit the short-term rental, especially close to sale. If you do use short-term rentals, avoid frequent or long periods of short-term leasing. So especially near the term you plan to sell. Even a temporary shift to short-term use requires self-assessment and moves the property toward being taxed as commercial. So maintaining that long-term leases up to and during the sale period help ensure the property retains its residential complex status for GST and HST exemption on sale of the property. Now, the third thing is avoid hotel-like features for short-term rental. If short-term rentals are part of your plan, limit hotel-like amenities, such as providing furnishing, utilities, and other services typical of commercial lodging. So these features making a property resemble commercial premises like hotels or motels, which further jeopardizes its residential classification. Number four, avoid multiple changes in use. Changing the property's use multiple times, that is alternating between short-term and long-term rentals, increases the risk of incurring GST and HST through frequent self-assessments. Once you switch to short-term rental, reverting to long-term may not erase the need for remitting GST and HST on the prior change. Consistency is the key. So by carefully planning rental terms and avoiding short-term leasing where possible, property owners can reduce the likelihood of triggering GST and HST through the change in use rule and maintain tax benefits on the final sale. Make sure you consult with a tax professional to navigate these rules precisely, especially when considering changes to your property use as well. So some genius landlords out there decided that maybe it would work to help to avoid this GST and HST application if you do a rental arbitrage as a workaround. Rental arbitrage is where someone or an entity rents the property to another entity, and then the second entity sublease it to on Airbnb platform or VRBO, the short-term rental platform. Now, this might seem like a workaround. It doesn't fully eliminate the risk of GST and HST being applicable on the sale of the property. Here's why and what to keep in mind if you're using this strategy. Number one, the ownership and use are the key for GST and HST. In the eyes of the CRA, the purpose of this property's use is central. If the corporation is running short-term rentals through Airbnb, it is still using the property for commercial activity, which is taxable. The CRA might treat this as a commercial use, regardless of whether an individual or corporation is conducting the short-term rental. Now, number two, the risk of GST, HST on change in use remains. Even with rental arbitrage, the property could still trigger a change in use if it shifts from long-term rental to short-term rental. This change could still require the individual to do self-assessment and remit the GST and HST based on the fair market value at the time when they switch the property from short-term rental to long-term rental, and making it difficult to entirely sidestep the tax obligation. Now, CRA's view on schemes to avoid taxes. CRA has provisions that allow it to assess transactions where it believes the main purpose is to avoid tax, such as under the General Anti-Avoidance Rule, which we all refer to it as GAR. If rental arbitrage appears structured mainly to avoid GST and HST, the CRA could challenge it, particularly if they see that the same property owner is behind the whole structure, essentially running short-term rentals and under a different entity. Now, number four, potential complexity and cost. Creating a corporate entity and structuring leases solely to bypass tax on short-term rentals adds administrative costs, complexity, and legal risk. Moreover, if GST and HST is eventually assessed, it could add up significantly. So bottom line on rental arbitrage for GST and HST, while rental arbitrage could create some separation, it doesn't completely eliminate the GST and HST risk due to change in use rules and CRA's potential scrutiny. If the end goal is long-term residential use to secure the GST and HST on sale, maintain that long-term leases directly may still be the most straightforward approach. So rental arbitrage may be more appropriate for income generation, but doesn't fully protect you against that GST and HST implications when shifting from long-term to short-term rental and shifting from short-term rentals back to long-term rental as well. So bottom line, navigating the GST and HST rules around short-term rental and property sales are very complex. It's even complex for me to understand, with significant financial consequences if not handled properly. If you're considering shifting from long-term to short-term to long-term and then to short-term and then selling it, it's best that you talk to a professional to understand the tax implication. So if you are currently not working with anyone or your current accountant would not be able to answer these questions, we're always here to help. You can always reach out to our office so then we can help you navigate the intricacies of real estate and GST and HST. Protect your investment, optimize your tax strategy, and keep more of your hard-earned income in your pocket. If you find our video useful, make sure you give us a thumbs up. Make sure you share our video with someone that could use this information as well. Until next time, happy Canadian real estate investing.